Hello viewers, my name is Cedric Chuuma and welcome to the Fiz Show Season 2, the Wealth Management Series. Thank you so much for tuning in, and today we continue our discussion on wealth management with my amazing guest, Carmen Hachandi. Carmen, how are you doing?
I'm very well. Thank you, Cedric, for the warm welcome. Glad to be here.
Glad to have you here. So we started this wealth management series last week, and we've seen there's a lot of interest in wealth management. So I think we could just pick it up from there. We can start with, I think, the debt restructure. That's a very hot topic for most Zambians.
Yes.
And we've noticed that with the advent of the debt restructure deal, there is talk of Zambia now aiming to get back to middle income status. So in the advent of these particular developments, what are some of the key risks and opportunities that you have identified as Carrick?
Thank you. That's a very loaded question, a very important one. First, I must start by stating that the whole debt restructure is very positive news for the country, very exciting. For any citizen in the country, we should be excited about the opportunities that will come before us as a result of this debt restructure. In essence, what does it do for us? As a country, it has eased our debt burden in terms of how much we have to repay in a particular year, which then helps us to have resources that we can channel to other social services, which is very good. We can have our old people receiving their social cash transfers, medicines in the hospitals, and of course, most importantly is that it brings confidence. Even the IMF deal combined, it brings confidence for investors to come into the country. What does that do for you and me? It creates opportunities for us to continue building on the wealth that we are creating. So with these opportunities, where Zambians can grow their wealth, invest in different sectors of the economy, get employment, get contracts, what that creates is an environment of opportunities for Africans, for Zambians to create wealth. And once you do that, you're going to be looking at how do I then invest my money? And that's where Carrick comes in. And Carrick's proposition is that, and how we are positioning ourselves, is to enlighten our viewers, our prospects, that as you invest, have an open mind towards diversification of investments, not only from a local perspective in the sense that I've got stocks on the loose, or I've got investments in government securities, I've got property. Look at diversification as a whole. If I'm invested in one jurisdiction, no matter how diverse my investments are, they are in one jurisdiction. So ours is to help you then say, how can you invest some money locally? Most importantly, what is there offshore that you can also invest in? And that's where we really add value.
So how do these current development impact your value proposition of offshore investing?
Yes.
Are they positive? Are they negative?
In fact, we are very excited. What it means is that my portfolio of clients will grow, because then we know that the government will be paying its dues when they are due to this relief from the debt restructuring. A lot of people in business have been owed money for a long time. Our hope is that there'll be funds now available to settle local bills, local contractors. These local contractors, when they earn that money, I think have faced quite a number of challenges with exchange rate movements, high inflation rates. They'll be looking to preserve the value of that money. And that's how and when Carrick comes in. So we're very excited that there are now opportunities for people to grow and create wealth. And that is where we as Carrick will also thrive. So when our clients' wealth grows, our wealth also grows.
Wow. I think traditionally, most Zambians have their own mechanisms of investing and preserving wealth. Some include village banking, investing in property, and so on and so forth. So how do these traditional methods of investments, I think you mentioned it earlier, property, how do they fare against offshore investment? And what approach does Carrick use to sell the message that offshore investments are a great alternative?
Okay. Thank you for that question. So your village banks, your investments in local property, your investments in many other securities, the Lusaka Stock Exchange, the government of Zambia bonds. What we call these are wealth creation strategies. To us, you live here, you work here, you are creating wealth in this country. African countries are predominantly impacted by what we call global factors. Time immemorial, all we see is African countries' currencies weakening against the global currencies. We also see high rates of inflation averaging 10%. That's in the better performing countries like Zambia, for instance. We've seen higher inflation rates around the region, Malawi just next door here. Therefore, having a village bank is a short-term measure. I don't see us planning for retirement using a village bank. The risks inherent in a village bank are very easy. One day somebody just ups and goes, and the fund has been regressed. However, the bigger picture is you're investing in local currency. Your 10% interest in that financial year, does it cover compound interest of 10% per year just on inflation alone? So there's a famous saying that he who understands compound interest earns it, and he who does not pays it. Cedric, if I were to ask you right now, to give you a proposition that I will give you $3 million right now.
By all means.
Or I give you 1 cent a day and I double it every day for 30 days. Which one would you pick? Oh. Which one seems more attractive?
I think the 1 cent one. Yeah.
You probably understand compound interest.
Yes,
so if once you understand compound interest, most people will pick $3 million.
Yeah.
But when you compound 1 cent a day for 30 days, the amount is much higher than the $3 million. Now I want you to take that back into inflation, local currency inflation. If it's 10% average, I did the numbers. I went to the Bank of Zambia website. Your fortnightly statistics report has got inflation figures from 2004, 5, somewhere there. Maybe 2001. 2001 to date, average inflation in Zambia is 10.41%. So if I compound, you know what inflation is, the rate at which prices are increasing. So if I compound to this year, they've increased by 10%. Next year, they've increased by 10% to the power 2, and so on and so forth. Will that local investment, how much interest should you be getting paid to be able to compensate for the loss in value in that investment in your village bank, in the value of the properties you've invested in your local government or Zambia bonds? So there's a difference between real return and nominal return. And what we must try to understand is, what is your real return on any investment? And that's really where Carrick comes in, to help you analyze the numbers. Yeah.
Wow, that's really, really powerful. You really brought out how Carrick, from what you've explained, helps preserve your buying power, I think, locally, within your local economy. However, when it comes to investing, macroeconomic factors also tend to play a factor in investment decisions. And in recent times, we've seen the kwacha performance against the dollar, how it has affected local players in our economy, and how it affects us as we participate in the global economy as well. So how does this particular performance motivate the prospects of your company, convincing investors that offshore investments are viable?
Thank you. Again, just to reiterate, I mean, whilst the prospects are looking up, we continue to be individuals that live dollar-based lives and are earning a local currency. So as much as we may have a view that in the short term, this is what's going to happen to the currency. What I've seen is that a lot of Zambians have stopped working. They've stopped looking for things to do and are now all traders. Everybody's just an FX trader. The minute the exchange rate has gone this way, we are all in the newspapers, we're all over social media. That's not our role. Your role is, this is the money I've earned, or really just real activity in the economy, right? Contribute. to actually growing the economy by doing real projects, going and registering businesses and supplying to the mines and getting an income. What we are doing is we're spending time on the social media waiting to see the latest update of the exchange rate. So we can go screaming to say this is what has happened. The kwacha weakening, any other African currency weakening is not a very big surprise, unfortunately. There is a developed world out there. And for Zambia, we depend a lot on this developed world. We import a lot from the developed world. So our costs, your laptop, everything on you right now is imported. The prices of everything that we are using right now goes up as the dollar strengthens. So in as much as we may be optimistic, I think that we must also look at what the facts are. The last 50 years, what has happened to the currency? The currency has depreciated close to 11.5% on average. And that's being very conservative. If you look at Nigeria, for instance, Nigeria is supposed to be one of the biggest economies in Africa. And it's an oil exporting country. Nigeria 15 years ago, the naira was at 19 naira to a dollar. Exactly 15 years ago, they're exactly where we are today. So when I think about 15 years' time, where is the kwacha going to be? I'm not looking at 6 months. If you're able to give me a view of how the kwacha has performed in the last 6 months, it's been all over the place. And that's why I'm saying that should not be the work that you're doing. The work you're doing is, I've created this money, I've generated money, I would like to pass it on to my children and their children. How do I do that sustainably? What are these investment mechanisms that can help me to do that? I'm not going to be sitting the whole day watching the exchange rate. I'm missing out on opportunities. So the road to manage the risk, you take it to your financial advisor, and the financial advisor will be able to identify means in which we can preserve the value of that wealth you've created. Mm-hmm. Yes.
So I take it Carrick Wealth is the best in the game at helping people preserve this.
Indeed, I would like to think that we are the best. I subscribe totally to what we're doing. I am convinced that the best way to leave a legacy is to be able to invest offshore, to put at least 40% of your wealth offshore. I would like you to come and talk to me because of my experience in the field of investments, in the fields of markets, and we also have a very good regional reach as a company. And we also have very experienced people that sit on our investment committee who together hold over 150 years in experience jointly. Oh. So we are bringing the best that we can to our clients.
I think you brought out a very important matter in your previous answer about how by investing offshore, you sort of hedge against the macroeconomic shocks, if you will, that happen with currency fluctuations. Now, for most local investors, whenever they hear companies like Carrick Wealth and Offshore Investing, first to mind is, I can't afford it, out of reach. So with regards to this, how does Carrick offer products to people like this to show them that offshore investments are something that they can aspire to and aspire for?
Thank you. That's a very interesting question. So I'll be honest with you that we will not be able to cater to everybody's needs. However, what is our role? What is my primary goal? Ensure that we have generations of people who understand what it means, the difference between creating wealth and preserving that wealth. Those are two different schools of thought. And once we have more people understanding that, even as they rise, even as they do what they're doing on the day-to-day basis to create a living, they have a view, and as they're setting their goals, they have a view as to what they want to achieve. And I individually want to play a big role in that by educating as many people as I can about what is there offshore. Now, not everybody may be able to do it currently, but you can work towards it. Specifically, when you look at the sort of value propositions that Carrick is bringing, we'll be talking very shortly about a $1 million life cover. Those are quite substantial transactions. They require a little bit of track record with savings and discipline, and everybody can aspire to get there. What is important is to have the information now, to know what these risks are. What I love about the work I do is that I think I bridge the gap between an accountant and an economist. The finance field, we bridge the gap. So we look at, fine, the economist says they're maintaining inflation at this, or they're managing money supply, and then the accountant is keeping the books and doing projects on the ground. It's very busy.
Yeah.
But as you are investing, we need to open up to, okay, how am I managing the risks? How am I diversifying away from these risks? And that's where your financial advisor, financial expert comes in to help. So it's important to build that knowledge regardless of where you are in life. Whether you have the access now or not, you work towards it. The interesting thing is, I'll tell you that in the developed world, people start work at 25 and they already have life cover. You're entering the workforce, and some insurance companies, some advisors come to your doorstep and told you it is critical for you to have life cover. So they all start their lives with a life cover. We don't do that here, and that's the education that we need to start. Yeah.
So from what you've said, anyone can aspire to the products that you offer. It's very important for them to have the knowledge now. So I take it your message to local participants, local investors, is that they can also invest offshore. They just have to understand that it's something that they can access through Carrick.
Indeed, you've summarized it very well.
Wow, that's really amazing. I think that's really inspiring. A lot of I think young and rising people up there are now thinking, because usually people look at offshore investing as a preserve of the wealthy, So it's important that you brought out that young people who are starting out, who are not there yet, still can use this information.
Precisely.
And I think in the first session, you said you'd get into some of these wealth preservation investment strategies. And one of them is the dollar life cover. Can you explain more on the dollar life cover and how it meets your clients' offshore diversification needs?
Okay. Thank you, Cedric. Yes, indeed. Our intention was to get into explaining some of these wealth preservation strategies. And today, we've picked the US dollar investment style life cover that you can access through our office, Carrick Wealth. Basically, it starts at $1 million. You can have a life cover of $1 million. If you're young enough, you're in your 30s, the affordability is better. That's why I'm saying it's not just about, people that have worked for a very long time. It's just about some level of planning. So it's an investment style life cover. The minimum amount of the policy is $1 million. The premium you pay varies, but it's a lump sum paid annually. What's interesting and intriguing about it is that it also acts as your retirement plan. When you have finished paying off the premiums, so number one, you actually finish paying off the premiums and you remain enjoying a $1 million life cover for the rest of your life. Once you're done paying off these premiums, the life cover continues to run, and the premiums you've paid are in an investment account. These premiums are earning interest, guaranteed every year until it's paid out. So the premiums that you've invested are growing. At a certain point, suppose you start at 30. By the time you're 40, you're done paying for it. At that point, other obligations come in. Maybe there are children's school fees. So now you start planning for children's school fees. But you already have a $1 million cover that has already been paid off entirely. You do not need to make any premium payments anymore. It's also a very flexible product solution because it gives you allowance for premium holidays, which are very rare. In most places, if you fail to make your premium payment, your policy lapses. But this is a very high value product by very reputable institutions that we're bringing to the table that are credit rated and are listed. So they have a very long track record of doing this. It's 150 years in business. Wow. So this is what the ones we call our service providers.
Oh.
Yes. So what's unique about it, I said, well, you're 40, you're done paying for it, and you continue working. When you're 60, at that point, it's been reinvested over a 20-year period, and we spoke about compound interest.
Yeah.
So it's gaining and it's growing. The fund is growing. You still have a $1 million life cover. Immediately, what does it do to you? The one that you first pay your premium, you immediately have a net worth of $1 million. So Cedric here, you are now a millionaire, Cedric, dollar millionaire. You can walk into the bank and tell them my net assets are $1 million. At 40, at 60, you're now in retirement. The fund has been invested for close to 20 years. It now has value. You can actually decide that in my retirement, I'll be withdrawing from my premiums, which have now grown, which we're calling the fund value. When you start withdrawing from the fund value, all you're doing is, if it was a fund value, you withdraw $100,000 from there for your annual upkeep, for you to go on holiday, for you to replace your geysers. Remember, we're talking about how we live a dollar-based life. All our costs, can you imagine what a geyser will cost in 25 years from today? Do you remember, maybe you were too young, what a geyser costed? Even just 15 years ago, I still remember. Geysers were around 1,000 kwacha. Yeah. The prices are not there anymore. So you have to plan for those exponential price increases as a result of compounded inflation year in, year out. And you cannot do it in local currency. You have to do it in foreign currency because those currencies are stronger. That is why it's $1 million life cover as opposed to, say, a $10 million kwacha or 20 million kwacha life cover. Because 20 million kwacha, in 20 years when you retire, we don't know what its value will be. Much less from previous experience.
So I think it's interesting you said when you invest $1 million, you're already a dollar millionaire from just investing in this insurance life cover. I think according to the Henley and Partners report, we have about 400 or so millionaires in Lusaka alone, if I'm not mistaken, give or take. So those are 400 potential clients. But my question is, with this the dollar life cover plan, it's a lot of money. I think I wanted to ask, can a company also invest on behalf of its directors or executive?
Yes, indeed. I think I need to clarify. 1 million is your policy. Your premium is much less. Okay. So the premium is determined by your age, your health status, your smoking status. Okay. So say you're in your 30s, you're probably going to get a premium of around maybe $10,000, $12,000.
Okay.
So it varies. If you are 55, almost retiring, it's very expensive because obviously the health issues and all, and your capability to pay, all that comes into play. So your premium, your annual premium, is not equivalent to the policy. Obviously not. Yes. So you'll be paying maybe, if you're in your 30s, over a 10-year period, $100,000 to have an asset of $1 million for the rest of your life.
So that first time that you pay your premium, is there a period before you can actually lay any claim on us? No. Remember from the first
how
time
insurance works. You pay your premium, it's in effect. If you die the next day, they'll pay out $1 million.
Wow.
We hope you live, of course.
Yeah.
And yes, companies, partners in business can sign on to what we call key man insurance. And how this helps the business is, in the event of one of the directors passing away, there's money that's input into the business. This helps you to pay off your partner's family and whatever share of his contribution in the business, so that the business continues to run. So we have a variety of ways in which we structure the solutions. Yes, we also cater to partnerships and businesses.
That's really, really amazing. It's been such an enlightening conversation.
Yes.
I'm looking forward to our next interview as well. Unfortunately, we've come to the conclusion of this episode, but we will continue next week. Very, very fortunate to have you here. And I'd like to thank the viewers for watching the Fiz Show, the Wealth Management series. And this has been Cedric Chuuma and my guest, Carmen Hachandi. Thank you very much and see you next week.